here, Dale.
Welcome back, Don.
Thank you very much. Happy
Uh,
New Year, and thank you for having me back.
oh, well, Don, Happy New Year to you, and may waterfall declines be in your future in 2020 to, um, pay off your perseverance in the business. Us dinosaurs have to stick together. What do you think?
Absolutely.
All
Thank
right.
you.
So,
And by the way, I want to congratulate you on that call back on December 26th.
the solar eclipse.
Yes, obviously gold, silver, oil, stocks, all sorts of currencies have proven you out on that one.
Yeah, we
Beautifully.
have another one coming up, Don. This time it's the moon, lunar eclipse, Friday or Saturday, I believe.
Oh,
So I'm really interested, and I think you have a great moniker and handle for what's happening. That there are military things happening on the globe, although there always are. But
may you live in
yeah,
interesting times.
yeah. So we can get your screen if you just hover your mouse over the green box that says share. You click that.
Okay,
You
and then
see
I
it?
see it up there. Do I click on that?
Yeah, you click on that, and then windows will come up, and then you select the window. You got it. Okay,
Is it? Are you
there
seeing
you
my
are.
screen that
You're
says no half measures?
got it. All right. So nice screen, Don. I'm interested. The Seven Sentinels. Is that the Swiss Guard that protects the Pope?
I'm not sure
Huh?
about that one.
Huh? You're not? Okay. Anyway, so I'm interested in what they're saying. We know that sentiment indicators. I don't know if you know Helene Miser, but she went over a whole bunch of things, put calls and things like that were flashing yellow. But I know you have your own proprietary type stuff. She was using like some McClellan stuff as well. So I'm interested in what your band is saying here with especially in light of uh, looked to me like a breakdown and then it negated the breakdown yesterday. So take it
It's
away.
pretty much the way I see it, Dale. Um,
Okay.
by the way, you're looking at my website right now. It says sevensentinels.com. These are articles that anybody can click on. And this one right here that says no half measures, you see my mouse hovered over that?
Yes. Yes.
Okay. Uh, After this interview, anybody who wants to read the notes from this interview can click on there, because what I did was I laid out all of my talking points and charts and so on here. And so I'll just go right down the page here and begin to lay out what it is that I'm looking at.
Okay.
Whenever you're ready.
We're ready. You're on.
Okay.
It's showtime.
All right, good. Um, for any that are listening, if you've been trading for a few years, you may have the thought may have crossed your mind that if you could just have one monster trend, your life as a trader would be complete. Give me one rainmaker, and I'll never ask for anything more. Um, and indeed, there have been rainmakers like that in the past, for sure. 1987, 2000 to 2003, 2007 to 2009. But here's the problem, Dale. Um, People don't recognize a rainmaker when they see it. Jesus said that a prophet is not recognized in his own land. Well, so it is with a market top. A market top is not recognized in its own time. Somehow, when it's right there in front of us, we just don't see it.
Well,
1987.
how about Don? I'm, I'm an open book. So I have thought over the last few years several times that
Yes.
I saw it, and it turned out to be a mirage. So I mean, how do we know the difference between what we want to see, what we might be seeing, and having it manifest?
Well, that's just exactly what we're going to talk about today.
Okay.
Um, Let's go back to 1987 as an example, though, of a situation that presented itself that few recognized. This is 1980's daily chart of the Dow Jones Industrial Average through 1986 and through 1987. And during that period, the market was moving up day after day, week after week. The investors' intelligence measures were at record levels. Um, VIX, which was known as VXO in those days, was at an all-time low. So there
My
was
God, I didn't even know they had that as a measurement back then.
they did, and
Huh,
it was VXO. In fact, I've got a chart of it right here. If I yes, see where it says VXO right here.
Yeah.
VXO was the version of VIX that existed in 1987, and what you're looking at here is the market up into the top on August 25, 1987,
Right.
and below it is the VXO. Now, an interesting thing happened in 1987 as we came into that August 25th top. You know, and I know that when the market goes up, VIX goes down, right?
Right.
Not so in 1987, as the Dow Jones Industrial Average came up and made successive new highs in August of 1987. Boom, 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 here to the August 25th high. Look what
the VIX was a tell.
It exploded upward ahead of any break in the market. In fact, it had moved up from 15 to 23. That's a 50% move.
Yeah. You know, if my memory serves me, the high that you identified in August, we had a decline, and we actually, that was a top. We had a failing rally into October. Isn't that correct? And so you know, you didn't have to recognize the top.
Yes.
You just have to recognize after the first break what an opportunity this is going to be if I get a failing rally to lay into.
Precisely.
Okay.
Very good point. But I would point out, too, that the VXO, VIX, was giving you a great big old heads up. Yeah. It was saying, look at me, get ready. We're going to have some really fun stuff ahead if you're a trader that will trade with the trend. And it did so by the exploding VXO. This was 1987, and you see the investors' intelligence, bulls and bears. They reached their highest level ever at 65% in late 1986. And that showed bulls, and the professional investment services bulls were 4.9 times the bears. That was the highest ever. But look across here from 1986 to 2020.
I'm losing your volume a little bit, Don.
Pardon me?
I'm losing your volume just a little bit.
Okay. Does this help?
There, yeah, you move closer to it. Okay.
Okay, good. Notice what happens in this 25-year period. Here we are in early 2018, and we're right back to that record, all-time high of 66% bullish and 4.8 times as many bulls as bears. That's whole 25-year period. 87 and 2018 were the only times we ever got that high.
Okay.
But in 1987, the focus of attention was it was not on the downside. Everybody's gaze was looking in one direction only, and that was up. All projections at the time were for higher targets ahead, and the mantra at the time was buy the dip. As always, this golden opportunity was unrecognized in its own time. Here is what followed. And here is what you pointed out, Dale, the failing rally right here.
Yeah.
But ultimately, from that August 25th peak here, here is where the FIX exploded. Here is the peak in the Dow Jones Industrial Average, and this is what followed. Those of us that were there remember it well. I'm not sure everybody.
I remember it.
The audience.
I went down to my bank.
Pardon me?
I had an office where in the lobby was my bank, so I went down to see if they were still open. They go, "What do you mean?"
Oh
I
yeah,
said,
I would wonder if they were
they
even
didn't know.
realizing what had happened.
They didn't know.
But at any rate, that golden opportunity for investors as everybody was buying the dip and ignoring this top and everything else was sort of a case of reverse alchemy. They had turned gold into glue. One of the greatest traders of all time, you know that I talk a lot
Yes.
about Jesse Livermore. He faced a monster trend in the year 1929, but unlike the trading crowd at the time, he understood exactly what he indeed was seeing. Just to give this some perspective, Livermore started in the late 1800s, 1895, with literally $5. After the 1929-32 bear market, Livermore was worth more than $100 million, $1932, and adjusted for inflation, that's $1.2 billion with a B dollars today. His mantra, rather than buy the dip, was be right and sit tight. And he said, once I learned this, millions literally came easier than hundreds had before.
For me, being right is easier than sitting tight. How about you?
Well, absolutely right. And that is exactly what we focus on at Seven Sentinels, having the conviction, the discipline, and the continuing trend measures that work to give
You'd have to tie me
us
up in a
as
chair,
traders,
Don. Don, you'd have to tie me up in a chair to get me to sit tight, okay? I'd have to be restrained, but all right, go ahead.
Yeah, well, at any rate, we try very hard to keep people focused on.
It's the toughest, and I say that, it's one thing to make a good call, but if you don't trade it, that's, so what? It's
Yes.
another thing to make a good trade, but the most difficult thing is to make a good hold,
Yes.
to have a good hold.
And that's why Livermore had said many times that of course, he used a sexist term. He said men that, and he should have said men and women who can both be right and sit tight are very, very rare. And as you know, and I know, the sitting tight is the hardest part of the whole thing.
Yeah.
But let's talk about sentiment in 2017, 2020. First of all, let me explain that I see the whole 2017, 2020 period as one big, magnificent top. It started back in 2017, and it continued through 2020. If you look at, for example, the transportation averages, they made their high during that period and are lower. The same is true of the Russell 2000. The same is true of Dr. Copper and all sorts of things. Actually have come down since the peaks that they made during the 2017 to 2020 period. I see that as one big top. But let's go through some of the sentiment readings that occurred in 2020, so you'll see why I believe the top of 2017 to 2020 is going to be, even though it's recognized by very few as a top right now, it's going to be looked at.
Losing your volume again, Don.
Pardon me?
Are you using a microphone?
Yes, I am.
Okay, so you have to. I know I've done that a million times. I walk.
Okay.
There, that's better. Yes.
Let me get right up on the microphone here.
Okay, you're good now.
Okay, good. The 2017 to 2020 period, I believe, is going to be looked back at by students of the market as the quintessential top, the big one. Let's just go through some of the sentiment measures. And they're right here on the screen. You can see them for yourself and read them. But in the Investors Intelligence Bullish Percentage top 65, only twice ever, the beginning of 87 and at the beginning of 2018. The all-time peak was in 2018. The Investors Intelligence Bull to Bear ratio topped 4.8. Only twice ever, at the beginning of 1987 and the beginning of 2018. The all-time peak was in 2018. The highest number of Hindenburg omens ever, and I'm not going to go into an explanation of that, we don't have time, but the highest number of Hindenburg omens ever occurred in 2017. The highest level on the CBOE skew index, again, we don't have the time to go into the mechanics of that, but the skew index hit its highest level ever in 2017. VIX registered its lowest number ever in November of 2017. It hit an intraday level of, I think, 8.56.
Okay.
Is our volume okay still?
Yeah, it's good. Yeah, I was just guessing. I thought it was 9 or around
it
9,
was
yeah.
around 9. I think the highest close was right around 9.
Okay.
But at intraday, at one point hit 8.56 in November of 2017. That was the lowest ever in history. The NAAIM exposure level, that's the, oh boy, I can't even think what the acronym stands for, but it's the mutual fund commitment levels well, anyway, the mutual fund commitment levels for hedge funds hit its highest level in history in 2017. They were over 100% long as a whole, all of them put together. And that's the first and only time they've ever crossed over a plus 100%. And since the dawn of the previous century, there has never been a period as long as in 2017 without so much as a 3% pullback. So there's just some of the...
Didn't we have a 3% pullback at the end of, in December last year?
2018, but I'm talking 2017.
Oh, okay. Oh,
right at the end of 2017, we had, well, actually, over the course of 2017, we had like something like 300 days without a 3% pullback.
All right.
So those are just some of the indications of why I look at 2017, 2020 as being the quintessential top. This stretched over 2.5 years. Now, up above, when I showed the 1987 example, I do want to make it clear I'm not predicting a crash. 1987 ended with a crash. I'm not looking for that. I'm looking for the same general pattern in the market, and that is that when you have extremes in sentiment, in this case the highest ever, when you have momentum falling all through the advance, when you have our 7 sentinels going to sell as they are right now, we have all the earmarks of the top, and I believe that it may have, and I'm going to be a little cautious here, it may have begun. We may have seen the final top last week. If not, we're so close to it.
You could taste it?
Yes, okay. I certainly can.
Okay, all right.
So that's really the things that I wanted to go over today. I believe that this market is not a measure, not a market that calls for half measures. I think this is a market that calls for the full measure of professional market trading.
And And by that, you mean position trading?
Yes. Yes.
Okay, and what does position trading mean to you? Is there a time frame to what separates a swing from a position?
Well, what we do at Seven Sentinels is we use three different time frames: the daily, the 2 hour, and the 10-minute
Okay,
sentinels.
all right.
When the daily and the 2 hour sentinels are aligned, we move up towards 100%, either long or short, depending on obviously whether they're aligned in uptrend or downtrend. And then as the shorter term measures begin to pop in the other direction, then we pull back our position.
Okay. Okay. So you will be trading, even though you have a long-term bias, your sentinels, if we're not going to have a crash and it's going to be a grinding decline, there's going to be a lot of times where things are going to flip for you. So
Yes.
can you ignore those sentinels and just sit with your position like Jesse would tell you to do?
Yes, but I wouldn't be fully leveraged doing that. I think it's
Okay.
just too nerve rattling to do.
So because instead of a rainmaker, could be a pain maker.
Yes, very, very well said.
Okay.
Very well
All
said.
right. So you want to show your website?
Yeah. Again, here is the Seven Sentinels website. If you go to sevensentinels.com, you don't have to be a member to read these articles. You can click on them. The notes of today's conversation aren't no half measures. Here are articles like Rainmaker and When Worlds Collide that talk about the precise numbers that we went over very quickly today for sentiment as they peaked out in 2017 and 2018. And if you go to limited time trial, click on that. Right now, I've set it up for anybody who wants a 7-day trial can click on there, and for $7, they could have a 7-day trial and just see what's there. We publish every day during the market hours, and then every night with an article about where we are in the market and what all of our indicators are saying, and then every weekend a weekly report. And then all of our signals are there and all of our trades are there. So we invite anybody to do that would like to. But in the meantime, any of these articles are yours to read if you just click on them. So we hope you will.
Thank you so much, Don, for coming in and showing us some market history and comparisons to where we are today. And I hope that blessings just chase you down and take you over like a tsunami, and you have that rainmaker happen for you and your people. And I'm always rooting for you.
Well, thank you so much,
And
Dale. And I can't tell you how much I appreciate what you do here. You're my favorite follow on Twitter.
wow.
Literally.
Okay. Thank you so much, Don. My
Okay.
trading warrior brother, Don Mead, guys, follow him on Twitter. Check out his readings. And Don, when we get back together, 3 months down the line, see how things are playing out into the spring.
Excellent. Excellent. In the meantime, good trading to you, Dale, and to anybody else that's tuned in here.
Thank you, Don.
Thank you.
Adios. So that's a wrap, everyone. Remember, don't just count your pips, count your blessings. Adios. We'll see you tomorrow. Go into members chat. I'm sure Blake is trading his head off. So I'll see you later on. See you guys tomorrow. Adios. Thanks, Don.
Thanks again, Dale.